Good morning. All right. Who was at the last Blockchain Connect conference in San Francisco? Not too many hands. But thank you for coming. This is very different. No fire engine, no police. You could actually find seats. So I'm glad we're making progress. In my opinion, catching the next crypto unicorn is a fool's errand. I think if it's already a unicorn, that means it can't be caught. So my keynote is to help you identify a unicorn early, and then idea of how to raise it, like raising a child. Any parents in the house? Not too many. Apparently, parenthood is not a very popular thing yet. All right, so before you all strike gold, I'll try to share with you something academic or pretending to be academic. So when you do strike gold, you could tell people this is why you did it, okay? Who's got phones? Raise your hand if you got phones. This has got to be everybody. If you're not raising your hand, something's wrong. If you're not raising your hand, well, take out your phones. Take out your phones. All right, thank you. So that phone in your hand is as powerful as a mainframe computer from 30 years ago, okay? It's as powerful both in terms of computational power and communication bandwidth. So that's the two curves on the left, right? So what I'm plotting for you is, you probably can't see, on the y-axis is the power of your phone, both in terms of computational power, the ability to crank numbers, and the ability to communicate, send information out or receiving, the transceivers, right? X-axis is time, okay? So those are the two lines on the left side. And then the blue line on the right is number of digital wallets, okay? So from this, it's a very crude, it's not going to win any IEEE paper, but sort of based on hand-waving argument, you can start seeing that phone in your pocket is really a server, right? So we basically, each one of us has a server, right? So we can start, function as a server, run applications. You're essentially a node. And that's what powers blockchain. So I have a thesis that as time goes on, what happens is that the blockchain adoption is actually similar to internet, but it's internet square, right? So the two components are your computational speed and computational power, or the communication bandwidth, right? So that quadratic relationship allows this particular application to spread a lot faster than even in the internet, okay? All right, so let's get that out of the way. The rest of it, hopefully, is a bit more practical that you could use, something you could use. So to identify a unicorn, how many of you attended one of these schools? These are all, so-called Ivy League schools. Raise your hand. Don't be shy. This is Silicon Valley. If you're not raising your hand, something's wrong. All right, humbled by this overachieving crowd. These guys, if you think about identifying talent, they're very good at it, okay? And specifically, I show you how they prove they're good at identifying talent, right? They continue to draw from the top, students from the world globally, and that actually hasn't changed, right? That's a curve on the right. It's very flat. And then the amount of salary they make, if that's a goal of going to school, salary, right, of these graduates, okay? But what's interesting is that if you want to think about a function of the school, right, the function of the school is to recruit talent, right? And then in theory, they add some value, and the talent becomes even more talented, right? You have to start thinking about the two different components: identifying talent and then adding value to the talent, right? And I'll let you decide how much value they add. But for one thing, they're really good at identifying talent. So I'm partnered in two funds. classic venture fund, Draper Associates, and then Draper Dragon Fund, cross-border China, US. We also have a crypto fund. I also run Draper University. So this is a school, the stats we have, right? There are a lot of numbers, but the number I want you to look at is the 2,700. So we track our students not by salaries they receive after school, but in fact we track by how many jobs they create, right? So that's how we measure value add. Okay, so I try to look at our portfolio and figure out how we identify talent. So I look back at the last 15 years of my investments, probably made 50-some investments, traditional venture-backed companies. And what I found was very interesting. I had probably 90% of the founders I backed are either technology or domain experts from that space, if not 100% technical. The second thing I noticed is that these founders are mission-driven, so that's something we always look for. They want to do something because they feel like something needs to be changed. Any parents in the house? I'm going to keep asking this question until I get more people to respond. All right, good. It's better than last time. I feel like your arms have been already warmed up. You could actually raise your hand now. World-changing opportunities. You know, when you were a kid, or when you at least watch TV, watch movies, they said you could be anything you want to be, right? So that's actually for real. We are looking for that kind of people thinking they could do anything they want to do, right? This is not true for all venture capital investors. It just happened to be true for our strategy for early stage, 2 people and a piece of paper, right? That's what we do. Makes sense, right? Anything you could do, anything you could be or do anything you wanted to be, because essentially what that described to me is a transformative idea that has a big market, has a big outcome, and that makes the math work for a early stage venture capitalist who takes lots of risks. It's all about risk-adjusted return. Last one's ability to navigate unforeseen challenges. Again, you see this in kind of the parenting landscape of helping your kids figure out what to do instead of telling them what to do, right? Because when you have 2 people on a piece of paper, oftentimes the plan changes. So when we invest in early stage entrepreneurs, I don't think I've ever seen a business plan that, when we receive it and then we compare that when we exit, it doesn't change at all. Typically, it changes at the first board meeting, right? It's called the first board meeting shock. And that's okay, because you do want people to be able to adapt, right? You want a good captain. These are our graduates from Draper University. These are just on the blockchain side, so you probably recognize some names from Qtum to Bitbounce to Data Wallet. And then we also have a dual that's working with government to try to create a free tax zone for crypto companies, right? One of the biggest challenges for crypto companies is no one want to domicile them, right? So you go to weird places like Zug or Singapore. So we want to create more of these crypto-friendly governments around the world. So we do big things. So now that we talk about identifying talent, or identifying a unicorn, how do you raise a unicorn, right? Again, parents in the house? No hands now. Parents in the house? For your kids? All right, reluctantly. Be a consultant, not a manager, right? So what we do is we try to make sure we give our companies a lot of space, let them do their thing, because they're the entrepreneurs and we're the investors. They should know a lot better than we do. Second thing, founder support. What we find is that we actually see more support between the founders themselves, right? Especially on the blockchain side, because there are so many new things going on. There's, under our portfolio, about 30 crypto companies. They form a network, and help each other out. And that actually beats a hub and spoke, we helping them, okay? So we also believe in creating winners, right? So we pride ourselves in identifying unicorn early, but inevitably, sometimes we make mistakes. Even when we do make mistakes and not sort of finding the best opportunity, we have ways to help them become successful, right? We want to plug them into our partner network, which I will talk a little bit about. Finally, last 2 points. We have a large portfolio of companies, and we continue to take those companies from the equity side and encourage them to move to the blockchain side. Just to talk a little bit about my investment thesis on the crypto side, I kind of break them into sort of 3 main areas. The one on the right probably is the easiest to explain. So these are what I call the blockchain precursors. I would invest equity in companies that has nothing to do with blockchain, but I see a vision of that company going into blockchain. So that typically would take 18 to 24 months for them to get listed. And then on the token in the equity side, so the blockchain space, we kind of split that into 2, infrastructure or support services and applications. So I think blockchain is still very early in its development. So there's still a lot of work that needs to be done on the infrastructure side. Think of this as internet 1997, 1999. You have lots of communications equipment opportunities, Juniper, Cisco, Extreme, Foundry, all these companies, they need to sort of happen in the blockchain space to make the infrastructure faster. At the same time, we always need applications on top. And then around all of that, you need media companies, you need exchanges, you need service providers for the whole ecosystem. So we're active investors in all the above categories. So this is just a overview of our portfolio. Last year, we were in 2 of the top 3 ICOs globally, THESIS and Telegram. And in China, we're in 2 of the top 5, VChain, Qtum. And on the equity side, we're in Coinbase, you all know, and Ledger. They've just shipped 1 million hardware wallets, the most active. And they're also the leading custody service provider for institutional investors. And this year, 2018, we have invested in a few early stage companies. Actually, Uconnect, sponsored by Silicon Valley Insight, is one of our investments. Alltrain, it's a public chain from former Alibaba team. Oasis out of Berkeley. QuarkChain, former Google team. Let's see what else. Panta, permission-based blockchain out of China. So these are kind of what I see as the next group of new unicorns we have identified, and we want to push them to that next stage. So one of the things that we pride ourselves is the Draper funds are around the world. There are 22 of us, and that's actually one of the key things how we help our companies. We believe blockchain is a global movement. If you look at blockchain white papers, typically it's a United Nations. You see companies, founders from different countries, and they work in a distributed fashion, open source. And our fund has been this way since the 2000s. One of the things I spend a lot of time on helping our portfolio is to develop exchange partnerships. And we also believe in this idea of a distributed partnership model. In other words, if you imagine a world full of cryptos in 20 years, what has to happen is there has to be a transition from fiat to crypto, right? Today, fiats are very distributed. When you go to Europe, they use euro. There's Australian dollars. When you go to, China is RMB. When you have Japanese yen. So you actually, by definition, you need to have onboarding mechanism for new users based on local fiat currency, right? So that is the anchor for our exchange strategy. So specifically in the U.S., So we're either investors or partners in all of these exchanges listed, right? So we have a long-standing relationship with each one of them. Essentially, I only send them my best deal, and they know that. So any deal we send to them, give them a bit more confidence that it's a legitimate team that's going to be around for a while. They're here to, change the world. So we basically have relationship with these exchanges from in the U.S., China, Korea, Japan, Australia, down to Latin America, and we recently also invested in a African exchange, right? So we cover all continents. And I just want to talk a little bit about why I think exchanges are so important. In the old model, so after my engineering job in business school, I spent some time on Wall Street. And our typical process was we would look for companies that have already been in business for a while. They've gone through, founder bootstrap for a couple of years, and then go through the venture A, B, C, D, E, F, G, rounds of financing, and then you do a mezzanine round, and then you take them on a roadshow, you charge them 7%, and then you do a secondary, So that whole process is, close to 10 years. But what I see the paradigm shift is that you have a project, you have a founder, you raise a round of equity from early stage venture, and then you go ICO, and then you list on the exchange, right? So it's actually quite a lot more efficient. So what you really have is exchanges are so important in our ecosystem in that it controls our relationship with the end consumer or the end investors. So that's why we spend quite a bit of time cultivating these relationships. And I call it the new Wall Street because I think at the end of the day, they control that relationship with the end investor. And it's a good thing. It's actually not monopolized. It's fairly distributed. And it's actually possible for new exchanges to emerge because it's very much technology driven. For instance, decentralized exchanges, that could be the next natural step for most of these central exchanges to evolve to. In addition to exchanges, our blockchain companies, this is all through our battle experience. This is what they need. Oftentimes, wallet is a big challenge for them, especially user-friendly wallets. Tools like search engine, like Etherscan, banking. If you're a crypto founder, you raise money. A lot of these U.S. banks just don't want to bank you, right? And we have a good relationship with Silvergate. Discovery on the internet today is still. CoinMarketCap is still the de facto discovery engine. So we have a good relationship with them. So our goal really is to help our founders. If you identify a unicorn, the easiest way for them to fail is when they get distracted, right? They typically come with a good idea. But if they're spending time trying to get a bank account, trying to figure out how to get their coins listed on CoinMarketCap or, focus on non-core functions like wallet, this will actually cause them to fail. And our goal is to basically take all of our portfolio and provide some centralized services. Last but not least, why is the clicker not working? Did I run out of time? Last but not least, none of us would be here 10 years from now if we don't have customers. I think we're in a grace period right now, okay? You call it honeymoon. But eventually, we need to create revenue. I don't care who you are, right? We've seen this movie many times. We've seen this in internet, we've seen it in clean tech, we've seen it in nanotech, we've seen it in share economy. At the end of the day, it's all about revenue. It's about profitability. So crypto, out of the Draper funds, probably is 10% of our portfolio. In other words, these 50 crypto companies we have as our portfolio company, we have 450 companies that have nothing to do with crypto. And these companies, on a daily basis, sell to these Fortune 500 companies. And basically, we have created this network of customers that we want to bring to our crypto companies. And that is really, I think, the key to make crypto companies successful. At the end of the day, you need customers. Lastly, any parents in the house? All right, so I mentioned kind of sidestep a little bit. My two kids, you could tell this is a first world problem. Which kids would have frowned when they were sucking on smoothies. You know, when I was a kid, I was drinking from tap water, and on a good day, we get boiled tap water. So I mentioned quite a bit about, you know, our strategy in working with our portfolios, right? So I'll just mirror that with parenting advice, right? And this is really small print. The first one, and I didn't make this up. It's over the years, I kind of collect this from, you know, various places. Be a consultant, not a manager. Very important, okay? So we're not, I can't even see this. I have to get closer. Sibling support. I think, you know, I always tell my kids, one day we're not going to be around, so it's you two have to help each other out. So as a venture fund portfolio, you can't rely on us, but you got to rely on our breadth of portfolio CEOs. They help you a lot more. You can be anything you want to be. Got to dream big. You know, small idea, not interesting to pursue. Self-regulation versus parental control. If we always tell our kids what to do, it fixes the problem right away. It doesn't it doesn't help them in the long run. So what we really try to do is get our CEOs to think for themselves and to navigate the tough waters ahead. And we can never predict what's going to happen, so we look for the people who kind of almost look for these challenges and then you know, embrace them with open arms. So with that, enjoy the rest of your conference and have a good time. Thank you very much.